So Shadowfax just went public, and their IPO gives us this incredible peek behind the curtain at the engine that powers India's e-commerce giants. Today, we're going to dive into the super high-stakes, high-speed world of last-mile delivery and figure out how this one company became so absolutely essential. I mean, seriously, have you ever really thought about it? You tap a button on your phone, and just minutes later, someone is at your door with your stuff. It feels like straight-up magic. But behind that magic is this unbelievably complex logistical machine, and that's exactly what we're going to break down today. Okay, but before we get to the solution, we've got to appreciate just how huge the problem is. We're talking about that final, most critical part of the whole e-commerce journey, that frantic race to your doorstep. Just try to picture it, millions upon millions of packages, all needing to get to millions of different addresses. You've got bustling city centers, remote little towns, all of them, every single day. It's this giant, messy puzzle of timing, traffic, and tech. That, right there, is the last mile challenge. And for any online business, solving it is basically the holy grail. So how in the world do you solve a puzzle that massive? Well, that's where Shadowfax comes in. This is a company that built the engine that pretty much all of India's biggest online brands now rely on to win that last mile race. They call themselves the backbone of India's last mile economy. And you know what? It's not just some slick marketing slogan. It's really their whole identity. They are the invisible infrastructure that makes all this instant commerce actually work. So how do they pull it off? Okay, their secret sauce is what's called an asset-light model. No, what does that mean? Instead of owning a giant fleet of trucks and hiring tons of full-time drivers, they tap into this huge, flexible network of gig workers. It lets them scale up or down like crazy, super fast, which keeps their costs way down and their efficiency way up. And you want to see the results of this model? They are just staggering. Just look at their reach. They're active in nearly 15,000 PIN codes across India. We're not just talking about the big cities here. That is a truly national footprint. And powering that massive reach, it's a huge human network. We're talking about over 200,000 delivery partners. That's the flexible workforce, this massive on-demand army that makes the whole asset-light model possible. And all of that, the reach, the people, it translates into pure market dominance. They now have a 23% market share in their space, but here's the really wild part. Just 2 years ago, back in 2022, that number was only 8%. That kind of jump is almost unheard of. It's just insane growth. So, who's actually using this network? Well, it's basically a who's who of Indian e-commerce. I mean, look at this list. This isn't just a bunch of clients. It's proof of how central they are. When everyone from Flipkart and Mantra to Zepto and Zomato depends on you, you're not just a delivery company anymore. You've become critical infrastructure. But that kind of explosive growth doesn't happen for free, right? It needs fuel. And in this case, that fuel is capital. Which, of course, brings us to the big news. The reason we're talking about them today, their initial public offering, their IPO. Through this IPO, Shadowfax raised a cool 1,000 crore rupees in fresh capital. Now, that's not just a number. That is a serious war chest for growing the business and cementing their spot at the top. But the big question is, where's all that money actually going? And here is their game plan. Look at the biggest slice of that pie. Over 420 crores is being plowed right back into their network infrastructure. Think things like automated sorting centers and smarter tech to move packages even faster. The rest is getting split between smart acquisitions, expanding their hubs, and of course, marketing. And for all you market watchers out there, here are the nitty-gritty details on the IPO. The price band was set between 118 and 124 rupees a share. The lot size was 120 shares, and the company officially started trading on January 28, 2026. Now, for any company that's growing this fast, especially in logistics, there's always that one big question looming. Are they actually making any money? And this brings us to a really crucial turning point in the Shadowfax story. This right here, this visualizes the moment every single investor dreams of seeing. In fiscal year 2024, the company was in the red, posting a loss of almost 12 crore rupees. Then, just 1 year later, they completely flipped a script, posting a profit of over 6 crores. That is the kind of turnaround that makes the market sit up and pay very close attention. And when you zoom out and look at the broader financials, the trend is just so clear and powerful. Revenue is climbing like crazy. But what's even more important is that the profitability numbers, like EBITDA and profit after tax, they aren't just growing, they're actually accelerating. I mean, get this. In just the first half of fiscal year 2026, they've already booked more profit than in all of the previous year combined. Wow. So, okay, the company's growing fast, it's profitable, the picture looks pretty good, right? But what does the future actually hold? It's not all gonna be smooth sailing. Let's look at the opportunities and the obstacles on the road ahead for Shadowfax. On one side, you've got these powerful tailwinds just pushing them forward, like the explosion in quick commerce and their own awesome tech. But on the other side, there are some pretty significant headwinds, things like relying too much on a few big clients and the brutal reality of just how competitive this low-margin business is. Let's dig into that biggest tailwind because it's a huge deal. Remember how we started this whole thing talking about 10-minute delivery? That quick commerce boom is a massive wave, and Shadowfax is basically in the perfect position to ride it. Their dense local network is tailor-made for the kind of speed that companies like Zepto and Blinkit absolutely need to survive. But here's the flip side. This is probably their most significant risk. Having giants like Meesho and Flipkart as clients is fantastic, but it's also a classic double-edged sword. If even one of those major clients turns around and decides to build their own delivery system or just switch to a competitor, it would have a massive impact on Shadowfax's bottom line. Which really brings us to our final big question. The logistics world is a game of pennies. It's all about moving massive volumes of stuff for a tiny, tiny profit on each delivery. So in that kind of world, can your own proprietary technology, your smarter routing, your better efficiency, can that be the one thing that creates a real, lasting competitive advantage? That is the billion-dollar question that Shadowfax is betting its entire future on.